Welcome to the FarrCast, providing you insight into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the 6th day of June, 2025. Summer is upon us. Schools will all be out soon. Yippee! And, ladies and gentlemen, we have some economic data, and I'm going to give you my thoughts this morning about the markets, where we are, what's happening in the economy. I'm going to keep this a bit brief, but I haven't done this in a while, and I really want to spend time, given all of the news with Elon Musk and Donald Trump, what's going on in that relationship. And then I want to talk about oil, energy, Iran, and a trade problem affecting the U.S. domestic industry in this trade dispute for energy production that's going to cost us a few really $1 billion of new business and new business investment, direct relation to this sort of trade war going on. And we're going to explain why. I was fascinated to hear about it. I think you're going to be fascinated too. Okay. Looking at the U.S. economy, for all of the hand-wringing, we got a payrolls number that was 139,000 in May, and unemployment at 4.2%. And what that means is that we're still having growth in employment. Employment in the worker base is still growing slightly, and unemployment is staying very stable. So the economy continues to grow slightly, and pay started to increase slightly. So the economy is doing okay, folks. It's not great. It's doing okay. The consumer continues to spend. Interest rates are slowing things down. There are significant headwinds to two things. There's significant headwinds to real expansionary growth, and those are simultaneous headwinds to inflationary growth. By slowing things down, you cool down inflation. Have they cooled so much that the Fed has to be concerned about recession right now is the big question. Does the Fed have to start cutting rates to avoid recession and make sure that it doesn't slow too much? Tariffs have certainly put the foot on the brakes in a significant way. Basically, the economy is doing okay. We have the discussion of the big, beautiful bill, and here's Farr's view on the big, beautiful bill. It's a distraction. It's a distraction. Yes, it's a really expensive distraction. It could add a couple of $1 trillion in debt over the next couple of years, and believe it or not, the numbers in that bill, while adding to the problem, we're in a hole and we're continuing to dig. Nobody really seems to care about the debt or the deficit. The debt and the deficit are going to continue to grow and going to continue to pick up that pace of growth, and not in a good way. Not in a good way. We're going to start adding to the debt even faster because of the size of the debt and the amount of interest that we have to pay on the debt. We're borrowing now to pay interest on the debt. We're borrowing to pay interest on the debt. We're opening up a new credit card to make the payment on our other credit card. That's what we're doing. Why am I sounding so sanguine about this? Believe me, I'm not sanguine at all. I'm just irritated because it's not the real problem. The real problem here is entitlements. Everybody on Capitol Hill, every economist in this world will tell you that we can't afford to continue to pay the rate of Social Security and Medicare and Medicaid that we're paying right now, that's continuing to go up as our population lives longer. Can't do it. We can't afford it. We cannot afford it. Okay? That's the big problem. That's the big hole on the balance sheet. That's the big problem in trying to figure out where we're going to have enough income to pay our bills. That's the bill that keeps going up. We don't have any choice in paying it. So until we have some sort of entitlement reform, we don't solve this problem. And the rest of it's just noisy distractions. And it's not going to go away. And the big problem is, when you have a debt that's now $36 or $37 trillion, and people are talking sort of benignly about adding another $2 or $3 trillion like we don't even care about it, And that's the way they talk about it. Oh, yes, we make a very serious face when we have to face the television cameras, but we're still going to vote for it because when I get money to my constituents, I get reelected. They like it when I bring money back to my district, my county, my state. Me. That's the place we are in America that I think is really upsetting, folks. Really upsetting. But part of me is really happy that Ronald Reagan's not around to see this. John F. Kennedy wouldn't want to see this. Eisenhower wouldn't want to see this. Truman wouldn't want to see this. I can't think of any of them that would want to see this, as many of them all wanted to get reelected. So, what do you have to do? There's a solution. I've got the solution. You have to index these benefits to life expectancy. They were started when life expectancy was 64 point something years old, and they began at 65. And now you're paying for a retirement that they were never intended to pay for. And everybody's living longer and longer, and medical science is going to make us all live longer. And my kids' generation likely get to 100 years old. Certainly my family, you get to 100 years old. My dad's 99 and 3/4 right now. My grandmother dropped dead at 106. My family gets old. So you got to pay for 30 years, 35 years of my retirement. And that was never the intention. So you index it to age. You make it within 5 years of life expectancy, and you creep there. You can do it very, very slowly so you don't really shock anybody. But if life expectancy is 78, over the next 10 years, you creep and make it longer each year until you get to age 73, if life expectancy is still 78. And if it goes to 79, then you make it 74 years old was when you get to retire. And it's got to be a 5-year period of retirement. Those numbers can be adjusted to solve this hole. They can. And if you want to do it politically, you can actually lower the retirement age and simply reduce the benefits. So you then make it allowable and legal for some folks, if they want to retire at 58 and receive their benefits. Far fewer benefits. It shouldn't be done because the folks that are going to choose that option are those going to be least financially sophisticated, because it's going to be a stupid decision to retire early and take less money for your lifetime, and you're going to have to deal with inflation and everything else. So, but the problem is solvable, and no one has the political will to do it. It is our chief problem, and everything else is a distraction. And our politicians, for all of the sound and fury, for all of the thunder and the echoes and the fist pounding and foot stomping, are not addressing the major issue of our economic day. Please talk to your congresspeople and your senators and tell them to please fix the entitlement problem. Then we've got a shot. Elon Musk has been a distraction here lately. Donald Trump and the fight and the bickering and everything else. What's going on in Iran, what's going on in China, and what's going on in the U.S. are things on which I'm focused, and I know you probably are too. We're going to go there on today's FarrCast. I'm going to come back with Dan Mahaffee, followed up with Daryl Owen on what's going on in the oil industry internationally. He just got back from an international trip. He's getting ready to leave on another one, and we were lucky enough to get him. Hope you enjoy today's FarrCast. Please stay with us. Mahaffee's up next. We'll be right back.
Thanks for being with us this week. Now it's time to go to our political analyst, Dan Mahaffee, and your host, Michael Farr.
Welcome back to the FarrCast. Joining me now, as he does every week, now into Season 8, soon starting into Season 9, Dan Mahaffee, president of the Dr. Scholl Foundation, scholar at the Center of the Study of the Presidency and Congress, and our senior political analyst on the FarrCast. Welcome back, Dan.
Good morning, Michael. Good to be talking to you.
Glad to be talking with you, sir. Elon Musk and President Trump are having a spat, Dan, having a spat. It's all over the headlines. It's affecting policy. It's affecting proposed policy. And it's great stuff for the headlines. The National Enquirer couldn't make this sort of stuff up. I mean, it's just awesome. Give us the lay of the land as you see it, will you?
I see this as the long question of when was that messy breakup going to happen. I think those of us who saw two very influential and very powerful personalities, both in the president and in Musk, and while there were aligned goals of convenience, there were certainly others that were going to come to a head when, as some in the White House might have said, Elon's usefulness for getting some unpopular cuts through ran out. On the other hand, Mr. Musk sees some of these recent policy moves as certainly a betrayal of what he was expecting. And certainly having given quite a bit to get the president and his Republican allies to their campaigns, he expected some measure of his policy aims to be met. And, these things we heard, like he was unable to get his head of NASA installed, the concerns he now has over the loss of the EV tax credit that Tesla does benefit from. These are all questions that Elon began to have, as well as his overriding, alignment. I guess where you could ask if you, I, and Elon Musk ever aligned on anything, an overriding concern in the debt and this growing propensity by both parties to just throw everything on the national tab and move on and kick the can down to another generation.
As you look at this, though, I mean, it seems to have greater consequences than some other firings because of Musk's enormous wealth.
Oh,
You and I,
certainly. This is no Scaramucci. This is no Bannon cast out. These are, this is one who, certainly Elon had promised to be the future source of funding for the Republican Party, and as a reminder, a significant source of funding to the Trump campaign. So a major source of financial firepower for Republicans is potentially pulling himself off the stage if this contretemps is not resolved. At the same time, the subsidies, the contracts that government has with SpaceX, other things like that are still leverage that we can't forget that plus the bully pulpit is the leverage that President Trump has over Elon.
okay, so the past couple of weeks on the FarrCast, you and I have suggested and agreed that President Trump's hold on his party and his power has increased in his first few months in office here. His trip to the Middle East, everything else, that hasn't been wavering. But now Musk is going after some of his supporters, and he's even threatened to primary certain Republican congressmen who are going to vote for this bill. To primary somebody, ladies and gentlemen, means that you find somebody to your political position, maybe more to the right of the one who's already there, maybe more to the left, but you put up your own candidate and you fund them and you fund them and you fund them. And while Musk has tried this in a couple of races, he might be able to have an impact. And we've never had anybody so wealthy that they could actually go up against the PACs, and maybe he could influence some of the PACs to support the candidates he wants. Is Musk in a position to really take on the president of the United States?
No, I don't think Musk is in a position necessarily to take on the president of the United States because the president's charisma and his ability to keep the voters and his supporters enthralled to him is ultimately what matters when it comes to exercising power at the ballot box. And Elon's also had the effect, as we saw in the Wisconsin judicial race, as you mentioned, as an example of perhaps turning off more voters that when he supported a candidate than attracting to the cause. So there's
Musk only
those
needs a
factors.
couple. This is a razor thin margin. He doesn't
Right.
need to
And so
turn too many.
what I want to do is introduce a nuance is that I think Musk is much more of a concern for a Republican senator in a battleground state or someone in a swing district who's worried about the resources they need to win, but also balancing the fact that the base of their party is now very rabidly still supporting President Trump. So that question between the voter as well as the financial side, and this is laying bare, I think, ultimately the fundamental question about the populist reshaping of the Republican Party. Does it continue on this populist path that is more towards Trump, Bannon, the shift towards Republicans being the blue collar party now, or is Musk able to reassert the business influence, the new generation of tech titans who came into the Republican Party, Thiel, others among them, who also see their influence, though, as being the bankrollers of campaigns. This is something that we are seeing play out, and the power of the president can't be understated in his ability, as I said, not only that bully pulpit, that influence he has over the voters, but his ability to change the net worth of his adversary, as we saw yesterday with the stock market, the stock prices going up and down as this Twitter spat happened.
Nobody has made a nickel by underestimating Donald Trump and what he can do and how he's been doing it. You don't have to like him, ladies and gentlemen, but he's really been pretty good at advancing his cause, and he has a lot of support. If you're not one of his supporters, you might be baffled and you might be angry. You might be feeling whatever you want to happen to feel, and he's still getting it done, and he has a lot of supporters out there with him. Okay, in this is something of a bombshell with this Jeffrey Epstein suggestion that Trump was a guest at the island and involved in Jeffrey Epstein's more sordid activities. Is there anything to that? And is that just are we just throwing some sort of canard out there, or has this got a shot?
I think it's the canard, and I think it's just part of a further online instance of using this Epstein scandal and this disgusting behavior to really show again that there's a divergence between somehow the political elites and versus the populace as a whole. And I just see this as something that is tabloid fodder that really just has people distrusting their institutions more as they wonder how could this scandal happen and why are so many powerful people involved in some way or some fashion.
You know, Dan, that I used to be an English teacher. I was an 11th and 12th grade English teacher, high school English teacher. And I admire teachers enormously, enormously. And the debt of gratitude that we owe them is just profound. I always kind of got along with the history teachers. My buddy Dave Jackson was a great history teacher, but I never really envied history teachers as much as I am now beginning to envy the history teachers of 25 years from now or 30 years from now, who are going to be able to walk into those classrooms and say, now, let me tell you, young people, what happened next? What happened next? So then there was this guy named Musk who had one company that was worth $1 trillion the day before and lost that and went down to 900 trillion. And they were going back and forth. And then he suggested that the president had been involved with this sordid underage sex affair with this guy named Epstein, who'd been this hedge fund manager who bought his own island. Kids, he bought his own island where he would take these underage guys. And just, I mean, if you can try and think of the absurdity of just going through the facts that have been in the headlines lately, I mean, all of those poor, all of the kids who were sitting there listening to, and then John Smith met Pocahontas, and it was here in the something settlement that happened.
Yeah.
Crap, who cares? I want to hear about
the AP U.S. history exam in 2062 is going to be something fascinating.
Don't you want to be? I mean, can we get hired on as essay readers or something to correct those exams, guys? Okay, Tan, I have this sense that somewhere in here, Trump probably gets his bill and probably Musk keeps his contracts. And does this settle out? And does it settle out in time for the midterms?
Sound and fury signifying nothing at the end of the day. Who
knows? Thank you very much for my English reference. Go ahead.
Well done. That and the question, of course, does this bill get through? The question, I think, is less of the noise you're having outside from Elon Musk and more of what's going on in the Capitol right now. And really, we've talked about what the Senate is going to look at and how they are going to have different priorities than the House of Representatives in paying for this. And as we've brought up, that state and local tax, that SALT deduction, salt in the wound, salt on the table, however you want to use these puns that have been abused to death. The question becomes in the Senate, look, in the House, it mattered because there's a constituency. There's Republicans from these states, California, New York, New Jersey, Republicans from those states want to get that deduction back for their constituents in these suburbs, Westchester County, northern New Jersey, those types of areas. Orange County, California, classic Republican strongholds in blue states. There in the Senate, however, is no such constituency for the SALT deduction. There are no Republican senators from blue states who want to support this. So it is one of the most vulnerable items out there, but it is still essential for this entire
It gets
package to
passed,
pack.
right? But sooner or later, this gets passed, Dan.
Sooner or later, it has to get passed. And ultimately, as Speaker Johnson said to Thune, apparently, you got to help me because I'm on dental floss over the Grand Canyon, is apparently the Speaker's quote when it came to
I'm
the
on
Senate
dental
Majority
floss over
Leader.
the Grand Canyon. That doesn't sound like a comfortable spot. Dan Mahaffee, president of the Dr. Scholl Foundation, and our senior political analyst on the FarrCast. Thank you so much. Again, I always learn so much. We're going to be back with Daryl Owen, ladies and gentlemen. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr.
We appreciate you listening into the FarrCast this week. And now to introduce this week's special guest, here's your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. It is the 6th day of June. Here we go. Last month of the quarter anyway, folks. Great FarrCast today. Interesting from Mahaffee and what's going on with Washington and the Musk conflict and what becomes of it. And can Musk be shoveled away as a multi hundreds billions of dollars, or can he really almost start to direct government himself? Fascinating discussion with Mahaffee. Daryl Owen is back with us on the FarrCast, a Washington, D.C. insider, pros pro, and was on Capitol Hill for a long time. He was the director of the Senate Energy Committee. He worked for Senator Bennett Johnson. He runs a lobbying group in Washington, D.C., and if you want to get it done, this is the man to see. They talk about the man to see. Daryl Owen's the man to see, particularly if it has to do with energy. So, hey, Daryl Owen, welcome back to the FarrCast.
Thank you, Michael. It's always a pleasure to be here.
We're really glad to have you. Daryl, I was noticing that the price of oil actually went up when OPEC said we're going to sustain our production increases. So they increased production, and then they came back and they had a meeting last week, and they said we're going to keep these production increases, and the price of oil went up $3-4 a barrel, $64 a barrel. I didn't get it. Can you help me?
Well, as I've said on your show before, predicting oil prices is a fool's errand, so here goes. I think it's principally focused on geopolitical tensions. It looks increasingly, to me at least, like the discussions with Iran are not going to result in a nuclear agreement. And both the U.S. and Israel have all but said, in the absence of a nuclear agreement, we're going to take out your facilities. The Iranians just ordered a very significant amount of fuel for ballistic missiles. And it's clear that they're rebuilding their ballistic missile system, much of which was taken out by the Israelis in earlier raids. And I think that's a fair amount of it, Michael. I think there are also some volumetric concerns, both from the standpoint of stockpiles,
Yes.
and also from the Permian is far from played out, but the Permian has definitely peaked. Everyone seems to believe that this year it will max its production levels and begin to decline. That is being hastened by the fall off in prices. You remember they touched 80 around the election.
Yes.
They're low 60s now.
Yes.
So you're seeing a lot of rigs being idled.
Okay.
And a slowdown in production. So I think it's a combination of those factors, but I think the principal one is just concern about geopolitical tension.
And you said they were ordering a lot of fuel for these ballistic missiles all of a sudden. Where does one do that? I'm sorry to go off on a tangent, but if I wanted to get me some of that fuel for the ballistic missiles, I mean, who do I call? Ballistic missiles fuel or us? I mean, they go to the depot.
Well, if you order ballistic missile fuel, let me know because I'm headed back to Louisiana. China is the provider.
China is the provider to the world?
Well, not necessarily exclusively, but that's where Iran placed its order.
Okay.
And these are not necessarily unique chemicals. These are chemicals which, when put together in a certain process, become ballistic missile fuels.
I presume we make our own, yes?
Yes.
Okay. Now, I heard a rant, and I really want to move on because I've got something else for you that's much more important, frankly. But I heard a rant by Tucker Carlson suggesting that Iran didn't have nuclear weapons, was not close to having nuclear weapons. They are not anywhere near having nuclear weapons. They'd never have nuclear weapons. They just simply can't give up on the idea. And this whole sort of narrative is more a political football back and forth, and that we don't have to worry about Iran and nuclear weapons. And that came as quite a surprise to me because I hadn't heard that anywhere else. Would you have any idea?
Well, it's not widely known, but the Department of Energy manages the nuclear weapons program for the United States. It's all part of keeping nuclear weapons in the hands of civilians. So when I was on the Hill, I was very deeply involved with the nuclear weapons program. And my sense is that Tucker Carlson just completely exhausted his knowledge about how nuclear weapons are designed and built. The process of nuclear.
But he did it he really raised his voice, and there was a little spittle involved when he did it. So he caught my attention, you know.
He's always at his best when the spittle comes out.
Yes. Well, we know people like that.
The process of uranium enrichment
yes
is not well understood, but it's a logarithmic process. And the reactor grade uranium typically is 2 to 3 or 3.2%. But as you continue to enrich, it takes a long time to get from the uranium that comes out of the ground to 3%. It takes less time to get from 3% to 15%, less still from 15 to 40, less still from 40 to 60. It gets much quicker. The Iranians have enriched to 60%, a considerable stockpile that is well beyond anything that is needed for energy production. They don't have any of the technology that they would need to produce nuclear fuel for a reactor. There's no reason on earth that they would be enriching to 60% other than to support a nuclear weapons program. Nuclear weapons,
is
military
60%
grade,
sufficient for a nuclear weapon, or does it have to go higher?
You have to go up to 90. But again, because it's a logarithmic process, getting from 60 to 90 is very quick.
Got it.
And they don't have any of the fabrication facilities that they would need to convert their enriched uranium into reactor fuel. There's just nothing to support the notion that they want this for civilian purposes. It's clearly military.
Okay. So Tucker is wrong on this one, and we do have to worry about this. And I still can't understand Daryl. Daryl, ladies and gentlemen, and I are the same age, and we've been putting up with Iran as a pest and a threat our entire lives, and I keep wanting to know why we don't take more decisive action. I don't know why we don't do something before they do something. Because every time they've had an opportunity to do something, they have. You have any insights there for me? And then I want to talk about ethane.
I don't have any insights for you, but I completely agree with you.
Okay,
They're weaker than they have been in a long, long time. And if we're going to take action against them, I think this is the time to do it. And I think they've been engaging in these talks to string the president along. He's not going to authorize military action while we're negotiating.
Right.
But if the negotiations cease, which it looks to me like they're on the verge of doing, perhaps he will. And I personally think he should.
I think we've got to do something about Iran. They're not going away, and they've just been awful. As I said, our whole lives. Talking about trade for a minute in the energy sector, Daryl, the deals that are getting made in your business, the robustness of that business, of the energy business, the oil business and gas business in the U.S., people were sort of thinking it's going to do better with lower regulations. And you're saying that's not true when it comes to ethane anyway. Is it true with oil? But I want to hear about ethane. Does the oil business do better under this administration that seems to shy away from regulation?
Well, the answer to that is a little bit complex. There have been a couple of very, very significant Supreme Court cases regarding the National Environmental Policy Act and the environmental impact statement process that have done far more to streamline the process than the administration itself has done. The administration is anxious to reduce regulation. It's not an easy process. Legally, you can't just dismiss it. You've got to go through the Administrative Procedures Act and a public evaluation and notice and comment, things like that, before you can just strip away regulations. And indeed, there was one Trump proposal that says we're going to sunset regulations once a year. Well, if you're halfway through building a pipeline, it takes 3 years and your regulations expire. What do you do? So their attitude is great. Their ability to deliver on what they would like to do is restricted. But what more than that, what is really hamstringing the energy industry right now is the uncertainty about global trade. What are steel prices going to be, Michael? You got a pipeline that you're trying to build. It's 1,100 miles long. What's it going to cost you to get the steel?
Right.
You've got an LNG facility that is just about ready for your final investment decision. Who's your customer and what's the trade implication going to be? Is there going to be a tariff on that?
Yes.
Are you going to be able to get your key components for some of these exports facility? All of the energy industry's growth is foreign exports.
It's foreign exports.
Ethane is a particular case in point. Ethane is a product of some natural gas production. Not all gas has ethane in it, but some does. Ethane is like propane and butane. It's called a gas liquid. You process the gas and you strip those out and you make use of them. The U.S. is the only exporter of ethane in the world, and we have two big companies that do it.
Okay.
China is the only country in the world that imports ethane. They import ethane.
So wait a minute, we're the sole producer and exporter. Well, we're the sole exporter and they're the sole buyer. This is one. Oh, wow. Okay. Isolated market, US. Got it. Okay. Go ahead. Sorry. This is cool.
And what the administration has done is they've suddenly stepped into an otherwise free market transaction between producers and processors in America and consumers in China. And they have required a license from the Commerce Department for export of anything that would have military application. Well, ethane is used to make plastic. It's a great leap to say, wow, this has broad national security implications, and therefore we have to shut it down. But that's what the administration just did. They did it to enterprise products, and Energy Transfer is sort of waiting for it to be done to them. They're the two big exporters. That has absolutely frozen several $1 billion worth of investment down on the Gulf Coast.
Really? Wait, hang on. So this policy, one, there are two companies that can't do business anymore, and it was their main business because we don't want that. Basically, this gives the administration some leverage over China in some of these negotiations.
That's what we believe. They've not told us that, but I can't imagine any other justification for it. I think it's in retaliation for the fact that the Chinese have been slow rolling rare earth export back to the United States. And this was something the administration could identify as exclusive to China. So this is a way to zap them without creating turbulence elsewhere.
How badly do they need ethane versus how badly we need rare earths?
You just put your finger on it. They can endure life without ethane a hell of a lot better than we can endure life without rare earths.
Are we driving them crazy on other things? Are there other issues like this that we're cutting off? I mean, I understand what we're trying to do, but is there anything? Do we have anything as important as rare earths to us, to them, that we can cut off?
If we do, I don't know what it is.
Okay.
But it's sure as hell not ethane.
Got it. And ethane making plastics is not going to increase their military profile or defense posturing.
I don't know where ethane would go in the military process. It's plastic. And most of the plastic that they manufacture using our ethane is then exported.
Well, water bottles, maybe. Okay. Now, so we have this little side scuffle going back and forth that may not have any effect at all in terms of the China negotiation, but it does in the U.S. and billions of dollars of investment in the U.S. Where would those billions of dollars go? What jobs would they create? What sort of materials will they need to purchase? How much business could those couple of billion? I mean, this is significant then.
Well, one of the big exporting companies has been planning on a major expansion of its processing facilities. And that is almost certainly going to go on hold until this situation resolves itself. You're not going to sink in excess of $1 billion into an expansion of a processing facility if you don't know that you're going to be allowed to export it. That impacts the exporting company. It impacts the contractor that was going to build the facility. It impacts the all the way back up the gas value chain to the wellhead. It will slow development of oil and gas in the Permian Basin.
Not to mention the folks that you would employ in order to do that, the employees that you would need, the jobs that would create, and everything else. So this is a real economic impact of this political trade dispute, ladies and gentlemen. This is big. Is there any chance, and how does this sort of thing get relieved, Daryl, really quickly? And then what else are you watching in Capitol Hill? And I had to go 2 minutes ago, so we've got to keep this quick.
I think the only way to resolve it is in furtherance of the Trump-Xi conversations. Whether it can happen fast enough to avoid harm, I don't know. There were some signals based on the conversation between the two presidents yesterday that maybe we're going to sort of soften our attitudes towards each other, and that rare earth export would resume from China. That would give our administration cover to back off and grant these export licenses for ethane. Whether that happens, we're watching very closely and hoping that it does. More broadly, the whole trade situation has got everyone flummoxed. As I say, you just don't know how to estimate costs of a major energy product when you can't determine what your steel costs are or what your key component costs are going to be. And so it's really freezing people in place all over the energy sector, and I sense elsewhere as well.
In addition to the policy, it's the policy uncertainty that's having a big effect. That's true in every area of the economy, whether it's the real interest rates, the expectations for interest rates, inflation, or the expectations for inflation. If you can't see some sort of path in front of you, you keep your hands in your pocket. Daryl Owen, you are the best. Thank you so much. I always feel so much smarter, at least for a few more hours, because then my elderly mind forgets half the stuff we talked about. But for the next couple of hours, I'm going to feel really smart because I listened to you. Thank you so much.
Well, Michael, that's really easy to overstate, but it's been my pleasure.
Ladies and gentlemen, that's it for another FarrCast as we cover Wall Street, Washington, and the world. Better understand the world around us, what's going on here in the U.S., and the implication for markets and the economy. I learn every week. I hope you do too. I thank you so much for listening. from Santa Barbara, California this week. I'm Michael Farr. I'll see you next week. Bye.
That's a wrap for this week's FarrCast. Thanks for listening, and thanks to our guests, Dan Mahaffee and Daryl Owen. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And if we can be of assistance here at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'll be happy to put you in touch with one of our investment professionals to help you navigate your financial course across the changing investing environment. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep the emails and messages coming. We'll be back with you next week when our scheduled market guest will be the return of fan favorite, Jim Murio. Until then, take care, stay safe, and stay healthy. I'm producer Harry Jennings. Thank you for listening to the FarrCast, Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC, or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.